Bunch of breaking news to talk about with regard to Silicon Valley Bank. They are holding their first hearings today in Congress as to what the hell happened here. Before we get to that, though, there has been at least a partial sale of Silicon Valley Bank. Let's put this up on the screen. This was brokered by the FDIC. The headline here from the New York Times is Silicon Valley Bank sold to First Citizens in government-backed deal. Banking regulators, which announced the deal late Sunday, had been looking for a buyer since seizing control of that failed bank. So this includes the purchase of about $72 billion in loans. There was a significant discount here of $16.5 billion. They're also transferring all of the bank's deposits worth $56 billion. Roughly $90 billion in securities and other assets were not included in the sale. But the bottom line for depositors, now you are part of First Citizens Bank shares. They're the ones who hold your money. You go to their branches, and they own the Silicon Valley Bank branches as well. Let's go ahead and put the FDIC announcement up on the screen just so we can get a sense of that. Their press release says First Citizens Bank and Trust Company in Raleigh, North Carolina, to assume all deposits and loans of Silicon Valley Bridge Bank. That is the sort of like temporary holding company for the bank. And, one thing that was noteworthy here is this bank, First Citizens Bank and Trust Company based out of North Carolina, that's purchased it, has apparently been making a habit of purchasing distressed banks from the FDIC. Their size has grown dramatically as they've purchased more than 20 different government-seized lenders. Their assets have grown to more than $100 billion from about $20 billion a decade ago. So that sale has been brokered, which, of course, Saagar, is worth remembering. This didn't take that long to unfold. The normal process that could have played out from the FDIC would have involved a similar sale, depositors being made, if not completely whole, close to whole. It just would have taken somewhat more time than what they were able to guarantee. But clearly there was a buyer for this bank and the assets here.
Well, there certainly was a buyer, and there's some even more of those details, which are pretty interesting, just about how much the Fed, the FDIC, and regulators screwed this before the actual crisis even began. You flagged this, is going to put it up there on the screen, that in a February presentation before the Federal Reserve, they had specifically brought up before the Board of Governors rising interest rates on banks' financial conditions and discussed the issues broadly, but highlighted SVB's interest rate and liquidity risk in particular. Staff relayed they were actively engaged with SVB, but as it turned out, the full extent of the bank's vulnerability was not apparent until the actual bank run on March 9th. So in other words, they knew exactly what was going on. They had some time to try and pressure SVB, to try and do something about it, to try and head off this crisis. They didn't do anything about it. And then the government stepped in and guaranteed all of the deposits at SVB and effectively at all large banks in the country, while also screwing the smaller community banks. So a precedent, we really can't let go of what happened. I know everybody's moved on, oh, nobody lost any money. There was no real bank run for normal people, so okay. But I mean, this still is an extraordinary, most extraordinary financial action by the United States government since 2008. And the precedent which has set is still not yet being grappled with. And unfortunately, even in the 2008 context, at least there was some anger about what happened. I'm glad that we are having some congressional hearings, but there is no serious effort yet to actually grapple with what happened here. And I don't think people should underestimate the political vulnerability that the Biden administration and really anybody who supported these actions could face, which we'll talk a little bit about, former President Trump definitely seizing on it because he's not an idiot. Anybody could see this is a real political vulnerability when, big bankers get bailouts, even whenever they do something where they screw up and they get to literally continue to do business as usual and keep their regular amounts of profit. It seems like a little bit of special treatment for one people and not special treatment for everybody else.
Well, and to that point, yes, nobody has any sympathy for bankers, the shareholders, et cetera. But I got to say, these depositors, put this up on the screen. We're getting some more details about exactly who was bailed out. Put this next piece up here. We now know, per the FDIC chair, that the 10 largest deposit accounts at SVB held $13.3 billion in the aggregate. Okay, 10 accounts had more than $13 billion combined. What is wrong with you that you're holding billions of dollars in an account that is only insured up to $250,000? And keep in mind the way this was sold to people, all the small businesses and the mom and pop food pantry. Bullshit. This is the people that you bailed out. So even the depositors, who were the most sympathetic group here, you know, I got some real questions about any company CEO or CFO that's holding over $1 billion in a bank account. You are an idiot, ultimately, and you do not deserve a bailout. You can wait a week or 2 weeks for a sale to occur to have access to all of your billions of dollars here.
Yeah, Krystal, that is an average of $1.3 billion in cash sitting in these accounts. So let's think about that. We all made fun of Roku for keeping $500 million in the bank. It turns out they were junior players and not even top 10 inside their deposits inside of this. It's also funny to me, you know, these people are supposedly the most sophisticated financial minds, and tech is the future. You know, I spoke to some of my friends on Wall Street. They were laughing at them, and they were like, hey, you think you're the first rich person to ever exist? All our high net worth clients have much more spread out assets, specifically in case this doesn't happen. They buy private insurance on their deposits because this type of stuff has happened before. And for somebody who has got a net worth of, you know, $5-6 billion, that interest payment that you'd be making on that is well worth it in the case of catastrophic risk, which is exactly what happened here. They were actually literally laughing at many of these tech billionaires and other people who might have had assets like this concentrated in their bank accounts, just saying that it was amateur hour. And so when Wall Street is laughing at you for being irresponsible, I don't really know what to say. When even they are like, you people are a joke. You know, you talk about how you're the future and you don't even know the very basics of what it's like to bank as a high net worth individual or as a high, well-capitalized company. I think you could see that there were some serious problems, not just with the bank. And that's also why it was important in the first place. Why did all these people have so much money in the bank? Because this bank specifically catered to this one industry. They became fantastically rich over a period of time. They had exclusive lockup deals. They offered very favoring financing, very favorable terms. I saw a hilarious one from a depositor who talked about how they had to move their deposits from Silicon Valley Bank to somewhere else, and that bank canceled their account because they asked for a physical address. And he goes, that never happened to me. And somebody at Silicon Valley Bank, and someone replied, you're like, hey, that's actually the law. You're supposed to have a physical address. So what are you talking about? He's like, oh, Silicon Valley Bank never asked me that for 7 years while I was a client of them. It's like, so they were basically illegally banking for 7 years while at this one bank. Why? Because they catered to the tech industry, which is high moving startup and all that. And look, risky industries are going to attract risk. That's something which everybody likes on the upside. Nobody seems to like it on the downside, except in this case, the downside, the U.S. government is the one that steps in and says everybody's going to be okay. So I just think it's totally ridiculous.
And there is, of course, still continue to be many questions about how the regulators were asleep at the switch here, which I think reflects a deep ideological failing among all of our supposed regulators, who have seen their role basically post-Greenspan and in the quote-unquote neoliberal era as, rather than them actually serving as the cops on the beat to make sure that any sort of obvious risk is being mitigated and these banks are being dealt with, they've seen their role as just providing transparency to the market because the market will handle the regulation. I mean, it really is like the most classic possible situation, because not only from Michael Barr's testimony here, but there was previous reporting that the Fed did know there were issues here for not just like a month in advance, for years. They knew that there was an interest rate risk exposure. They sent their little memos to the bank of like, hey guys, you got to do something about this. But they didn't actually take any action. And so who ends up on the hook at the end of that? Well, it's all of us. The last piece about that I just can't get over with the, depositors with billions of dollars in the bank. We were really sold this narrative of we've got to act and take these extraordinary actions because this particular bank is special and this is going to have huge reverberating impacts on all of these small businesses, et cetera. I think we can see now that there was perhaps no bank and group of depositors better prepared to weather a financial storm than this bank and this group of depositors. So, if they had to get a bridge loan from their wealthy backers until, the next week when they'd have access to their deposits, most of these people would have been fine. So again, this speaks to the core problem and the ramifications of these actions, which is, if you're going to intervene in this incredibly extraordinary system-wide way, when it's Silicon Valley Bank, a mid-sized bank with a bunch of billionaire depositors, that means that you basically have every significant bank in the country. You have deemed them all too big to fail. You have put the taxpayers on the hook for all of these banks and whatever idiotic decisions they're making. And that's the piece of this that we really can't lose sight of, Saagar.
Hey guys, ready or not, 2024 is fully upon us now, and Saagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.